there's already been there have been quite a few REIT and real estate issuances in the green bonds market. I don't know, how many of you have been graced already with the buzz around green bonds? It's quite a hot topic at the moment. Okay, so not a lot. So the reason why most of you haven't is that it is still just 0.05% of the total global debt capital market. So it's a new, exciting space. Last year there were $38 billion in green bonds that were issued, which was almost close to a tripling of the previous year. And in the next year, most pundits and observers are really hoping for $100 billion, so more than double. There have been a number of real estate issuers in the market, Vornado, Vasakronan in Sweden, for instance, Unibail Rodamco. So there's been a lot of interest, and obviously real estate companies and REITs have, in many cases, have the programs and the pipelines to drive that kind of issuance. So it is currently being put forward along with instruments like yieldcos as a new way to finance investments in sustainability oriented projects, activities, technologies, equipment, etc. And probably the best way to understand what the potential is to kind of look at what the segments of the market are. I would say maybe 40% of what was issued last year were corporates. Corporates like Bank of America, for instance, Toyota issued an asset-backed security. So I think that what that speaks to is drivers of corporate procurement for energy efficiency equipment, for instance, or renewable energy. So the corporate market speaks to one element of it. The muni market exploded last year, so I think that speaks to the potential for the growth of mush markets and financing institutional investments in renewable energy and energy efficiency through green bonds, and also urban, like much bigger urban sustainability initiatives. The asset-backed securities market has also grown dramatically. Hawaii, for instance, issued a utility fee securitization bond last year from which the proceeds are going towards installing solar in lower-income households in Hawaii. So, and PACE bonds, likewise, we'll mention PACE. PACE bonds are starting to be issued as well. So there is tremendous opportunity here for funding projects specifically for aggregating cash flows from disparate assets in this space. For corporates to procure, for municipals to procure, and I think that this could be a really big financing vehicle for real estate and for investments in sustainability in the built environment more broadly.
Okay. Deutsche Bank.
Congrats is doing really interesting things in that space too.
All right, so I think like sort of the basic question. You're gonna knock it down.
All right.
I can say that for you. Just like high level, sort of a green bond is like a bond, except it's green. Okay.
Oh yeah, sorry. I didn't say that. It's just
so
a bond.
like there is some sustainability or green aspect to the project, which in the issuance of the bond, in the use of proceeds, you are sort of earmarking it for that particular use. So for the real estate companies, the REITs that have issued. They have used systems like LEED to say that this is how you are going to see that we are using the proceeds for a green project. And one of the concepts which is sort of being thrown around, especially for new development, is, okay, if it was new and it's Class A and it's in New York City, you would have built it green anyway. So what is it that you're trying to sort of say is this additional component that you're adding in? We can talk forever about it outside of real estate, but let's keep it to real estate. So Deutsche Bank on the bank side has been very involved. We've done underwriting issuance on Vornado and Unibail and others. You can ask me about that later, but I want to turn it over to Chris for the rest before we go to questions.
He definitely has fired. I do have a few things to say, but okay. So let me actually. I think that Lenora put after we established what a green bond is, which is basically a bond for which the use of proceeds has been specified to be something greenish, and that Lenora described, and actually, if you haven't read it or haven't seen it, like last year, Bloomberg's survey of the green bond market is impressive. I mean, $38 billion, lots of activity, but the question I would ask, based on reading that, when you read that, is not what's not exciting is the participation by the real estate industry today. We have participated enough to know that we can participate. But relative to our peers, we have sat out this tranche of money so far. And the question we are dealing with this year and next year is, do we as an industry want this money? This money, and by that I mean, there is a demand, and we heard it a couple months ago from a gentleman from Calvert Investment saying, I will essentially take all the green bonds that the real estate industry, want to produce. I have a way to buy, I'm interested in these. But we as a group haven't decided if we actually can navigate the things that Ari was just describing in a way that we want to participate. And I want to throw a few things on the table. So I think this is a big year or so. Our peers in renewable energy, solar, infra, they are using this money. And that could be that as an industry, credit-worthy actors in this industry are awash in capital, and they don't need to go after another source of money that has these additional stipulations. There's a number of other things that happen. And at the same time, we have these back pressures in the market that basically are trying to navigate what Ari was describing. Is a green bond, does it have to be, living, building, challenge, uber green, negative carbon, floats off the surface of the land, and basically is, sort of unicorns and rainbows? Or is it sufficient that it's better than mainstream, it's green for these reasons, and that's okay, or it's improving, or it was an Energy Star 5 and you made it an Energy Star 30, which is in absolute carbon deal, that's the real deal, but would be grossly insufficient to the unicorns and rainbows crowd who think that the only thing worth bonding is this incredible mega thing. Okay, and I would argue that we actually have this, we've been down this road before, and the precedent I would suggest is, we all know what happened with Kyoto and the clean development mechanism and buildings. We all know the answer to that. You should know the answer to that. The answer is nothing. We didn't participate. We made it too hard, too expensive, too complicated, too high transaction costs. We worried too much about additionality. And as a consequence, a lot of other project types received support from Kyoto CDM all around the world, not in the US, of course, where they're eligible, and buildings by and large did not. Okay, we are on this precipice. There is money to be had, there is pathways to get that money. We as an industry, I believe it's fair to say, haven't quite figured out whether we can make this simple enough and convenient enough that we can create a deep, liquid, and impactful market for green investment in real estate. People would like us to, but I think we're on the precipice. So I will be doing our part within GREST to make it faster, easier, cheaper, more efficient to create these entities. But whether the entities, i.e. the funds, the property companies that are capable of issuing this kind of debt want to and see it as a business imperative, I think we're in an interesting period.